Imagine this. You're sitting across from a mortgage broker, excited, nervous, hopeful. You've saved for years. You've checked your credit score 100 times. You've rehearsed your answers. And then the broker leans in and says something you didn't expect. Don't worry. There are ways to make your file stronger. Most people smile and nod, thinking this is just part of the process. But what they don't know is that behind the scenes, mortgage files can be far more complicated and sometimes far more dangerous than they appear. Today, I'm taking you inside that hidden world, the legal opportunities that can genuinely help you and the illegal shortcuts that can destroy your financial future. Before we talk about the darker side of the mortgage world, I want to start with something positive, the legitimate, fully legal strategies that many homebuyers simply don't know exist. These aren't loopholes. They're not tricks. They're simply parts of the system that most people never hear about. Picture a young couple walking into a showing. They love the house, but they're worried about qualifying. Then the realtor casually mentions, by the way, the basement is a legal secondary suite. What they don't realize is that this single sentence could change everything. A legal basement apartment with its own entrance, kitchen, washroom, and proper registration can allow lenders to count rental income toward the household income. That means stronger GDS and TDS ratios and a much higher chance of approval. But here's the catch. It has to be legal. Not my uncle built it. Not the previous owner said it's fine. Legal, registered, documented, and ideally with a rental agreement in place. This is one of the most powerful tools buyers overlook. Now let's talk about something even more surprising. The income sources that many Canadians don't realize can strengthen their mortgage application. These aren't shortcuts. They're legitimate parts of the lending system that simply don't get explained clearly. Let's start with heritage money. Imagine someone receives an inheritance, maybe a lump sum, maybe a structured distribution. Most people think of it only as a down payment source. But in some cases, lenders may consider it as part of the applicant's overall financial stability. It doesn't replace income, but it strengthens the file. It shows long-term financial backing, which reduces risk. It's rarely discussed, but it's absolutely legitimate. Now think about newcomers. Many arrive with strong careers and stable salaries for back home, but they assume none of it counts. The truth is, some lenders do consider foreign income, as long as it's properly documented. Employment letters, pay stubs, tax documents, bank statements. If the income is stable, traceable, and verifiable, it can help. This is a lifeline for newcomers who are still transitioning into the Canadian job market. Then there's seasonal work. Landscapers, construction workers, tourism employees, people whose income fluctuates month to month. Lenders don't just look at the current month. They look at patterns. If someone has been doing the same seasonal job for 2 or 3 years, earning consistent amounts during the same months, lenders can calculate an average annual income. It's not about the fluctuations, it's about the long-term stability. Another misunderstood category is government benefits. Some people assume that if money comes from the government, it doesn't count as income. But that's not true. Depending on a lender, certain benefits can be included, like child tax benefits, disability support payments, or long-term assistance programs. These benefits are often stable and predictable, which is exactly what lenders like. Now let's talk about retirees. Many older buyers think they're automatically disqualified because they're no longer working. But lenders often view pension income as one of the most reliable sources out there. CPP, OAS private pensions. These are consistent, long-term, and guaranteed. Retirement doesn't mean you're out of the game. And finally, disability income. This is one of the most misunderstood categories. Many people receiving disability support assume they won't qualify for a mortgage, but that's not always the case. If the income is stable, long-term, and documented, lenders may include it as part of the applicant's total income. It's treated with the same seriousness as pension income because it's predictable and consistent. So before we talk about the illegal shortcuts, the dangerous paths that some people take, I want you to remember this. There are many legal, ethical, and fully acceptable ways to strengthen a mortgage application. The problem is that most buyers simply don't know about them. And when people don't know their legitimate options, that's when they become vulnerable to the wrong people. Now we move into the part of the story that isn't so comfortable. The part that exists in whispers, in back rooms, in private conversations. The part that many people don't want to admit is real. Imagine a newcomer to Canada. No job yet, no local income history, but a good credit score from back home and enough savings for a down payment. They walk into a mortgage office and hear the same sentence over and over. Sorry, you don't qualify. Then someone, maybe a friend, maybe a relative, says, I know a guy. He can make it happen. This is where the illegal world begins. These brokers don't advertise. They don't have websites. They don't hand out business cards. Their entire business runs on word of mouth and on people who feel desperate or stuck. Here's how the process usually unfolds. The first meeting is always friendly, calm, reassuring. The broker listens to the applicant's story and then says something like, Don't worry, I've helped many people in your situation. They never say the word fraud. They never say fake documents. They use phrases like alternative solutions or special programs. Before anything happens, the applicant is asked for a prepayment, usually between $1,500 and $5,000. There is no receipt, no contract, no warranty. The applicant is told, this is just to start the process. And once that money leaves their hands, it's gone. This is where things cross the line. The broker creates a fictional version of the applicant's financial life. Sometimes it's a fake self-employment profile. Sometimes it's a fake job. Sometimes it's a company that pretends to employ the applicant for several months. The applicant receives real checks or e-transfers, not as income, but as part of the illusion. The same money is quietly returned to the company through cash or transfers from other accounts. It looks real on paper, but it's not. These brokers don't work alone. They often have connections with unlicensed lenders, individuals posing as employers, or people who specialize in creating documents. It's a network built on risk, not for the broker, but for the applicant. And here's something most people don't realize. These illegal brokers don't accept everyone. They prefer clients with good or excellent credit scores. Why? Because it reduces the chance of the lender questioning the file. They're not helping the applicant. They're protecting themselves. People often ask, if this is illegal, why hasn't it stopped? The truth is, these operations evolve constantly. As regulations tighten, they change their methods. As lenders add new verification steps, the brokers adjust. It's a cat and mouse game. And unfortunately, the people who get hurt are the applicants who trusted the wrong person. Here's what many applicants don't know. Lenders can investigate a mortgage file years after approval. If they discover fraud, even unintentional fraud, they can cancel the mortgage, demand immediate repayment, report the case to authorities, and damage the applicant's credit for years. And the illegal broker? They disappear. No receipts, no contract, no accountability. So how do you stay safe? It's simple but powerful. Work only with licensed mortgage professionals. Verify their license online. Never pay large upfront fees. Never sign documents you didn't personally provide. And if someone promises approval, no matter what, walk away. The mortgage world has two sides. One is full of legitimate opportunities that can help you qualify. The other is full of shortcuts that can ruin your financial future. My goal is to help you see both, clearly, honestly, and without fear. If you're buying a home, protect yourself. If you're new to Canada, ask questions. And if someone offers you a miracle solution, remember, real approval doesn't need miracles. It needs honesty, planning, and the right guidance. If this episode opened your eyes, hit like, subscribe, and share it with someone who needs to hear it. And I want to hear from you as well. If you've ever run into confusing mortgage rules, surprising lender requirements, or strange advice during your home buying journey, share your experience in the comments. You don't need to name names or reveal anything personal. Just tell us what part of the process felt unclear, unexpected, or even a little bit suspicious. Your story might help someone else avoid a mistake. And together, we can make the mortgage world a little more transparent for everyone.